Bring that ass back like a boom, 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 boom.
Happy Sunday, everyone. This is Supernova Euro with Boom Traders Weekly Market Overview, November 27. Let's get it going. We have a disclaimer here, just basically saying this video is for educational purposes only. And this is the session overview. We have the models, market, price, action, internals, notes, sentiment, and seasonality. And let's get it going with the models. We're switching again to buy caution, and this has been a constant non-stop action between sell caution and buy caution. It basically goes to say that the market is very tricky right here. It's pretty much switching from week to week without a clear direction. So just stay ahead of it. Be careful what you trade. The breakout model is on caution right now. It was not working as of last week. This week we had some positive action in the markets, so we put it back to caution. And this also goes with the short-term model that moved to positive. The midterm is still on neutral. Long-term, of course, is on negative. And now when we look at the price action that falls next with the three indices, you will see why we still have the midterm on a neutral, but the short-term moved to positive action. So here are the three major indices. I don't have Dow Jones, as you probably know by now. It's only 30 stocks, and it's busting higher, probably gonna take all-time high soon, but we're far more interested in these three. So let's start with the S&P 500. I'm sorry. And we have this channel has been going downwards ever since. Well, right here in September, we started to make an upward channel, and we are now interested in this upward channel and where it ends. So here you have the action on last week, starting with Monday, Tuesday, Wednesday, Thursday, and Friday. Of course, Thursday was closed, so very little volatility here towards the end of the week. And you can see a very, very narrow inside day on Friday, right below this resistance right here where we spoke about it, 403.01, right here tapped it, and it just closed back. Then we also have the 200-day moving average on top. We also have the top of the channel and this upper channel line, which acts as resistance right here. So these zones converge right around 410, but we have to take out, of course, the 200-day moving average above us before that, and we need volume. Now I want you to pay attention. Look at what's happening to the volume right here. Yes, I understand it was holiday for 2 days in the United States, but nevertheless volume has been dropping really hard. So I would be careful to consider putting any more pressure on stocks right now, especially with this zone on top. I could definitely see us getting back a little bit and at least trying to test this lower part of the channel, which would of course be rising at this moment, but still it's like 20 points below. So be careful here. And also, of course, you probably know the saying that if bulls take Thanksgiving, then Christmas is for the bears, and vice versa. So we clearly have a bullish rally here, but the Christmas might be for the bears. And this also tells you why we have the model says we do. Like the week was a good one, definitely moved higher, but if you look at the midterm, let's just pull it up again. If you look at the midterm, we're still in this channel which is downward sloping, so the action is neutral. Unless we bust through the channel, the midterm will be staying in neutral. And of course, for the long term to turn positive, we need to have like the price action above the 200, above the 20-day, above the 50-day, and definitely finding some support above the channel. So we'll probably need to bust the channel, come back a little bit, test, see if we can build some support, and then continue higher for us to have the long term on positive. But that probably sounds like wishful talking right now, rather than something that could happen really in the short term period. So Here's the Nasdaq. Definitely looks the worst out of the three, and if we add into Dow Jones, that definitely looks the worst out of the four. As far as the action, we are far away from the 200-day. You can see right here, 0306.94. We're also far away from this resistance at 293. The point of control of the really important zone right here is 291. We're below it. Little side action here inside bar on Friday, right above our support zones. So this is just looking like no man's land. You can see there was some positive volume right here. I believe that should be Wednesday 20. Yeah, that should be Wednesday. So we had some positive volume right here on Wednesday, and then Friday inside day. So we'll see what happens on Monday, but just remember we have support below, we have resistance above, so it's a very difficult zone for Nasdaq. Now let's go to IWM, which looks strikingly similar to S&P 500. We have this resistance on top, and then we have this upward sloping channel right now. We are in the mid of the channel, so there's still a lot of work, but we were able to bust the 200-day moving average. Basically what you saw right here, we were riding the top channel. The top channel busted 200-day, rejected again, got to the mean, which is this silent line, which is 20-day moving average. Back to the mean, support, and now we are just trying to get up. But look at the volume. I mean, volume is drying up right here, so I would be really careful with my longs and putting any more exposure. Basically what I would probably do right now is either try to take some off on strength, or at the very least just observe what's going on and not add a lot of new positions at this moment. So let's take a look at some of the indicators that are used for market timing, and then we're going to take a look at the notes. So for the internals, I do have a couple of things I want to show you guys. First, here the four oscillators that are generally used for market timing, reversals, and so forth. My two oscillators based on the advanced declines and the volume in the advanced decline issues, they are almost coming to the overbought levels right here. You can see mildly overbought on the first one, and this one's almost overbought right here, the 60-65 level. As far as the SPY breadth thrust, we have it at 57. The upper zone right here is 61.5, and the McLean oscillator clearly overbought at 162. S&P 500 definitely outperforming the Nasdaq. You can see the purple line right here. But if we also look at the VIX, which is important, I want to know, just zoom in on 2022, you will see this resistance on the SPX. I use SPX because there's no volume to mess around with, but here you can see this resistance on top of the SPX. Then you can see the exact same line, but at the bottom of VIX. So this has acted as support, this has acted as resistance, and we are approaching this on the SPX. So I would be careful with the VIX. We might see some bounce at least to the midline right here, this 21-day moving average, which is 24. So I would be careful here, as I said in the previous section, with adding to long exposure right now right here. Now take a look at the put call ratio. Put call ratio is been dropping, so 0.86, which is good. Means that the markets are not adding a lot of protection, and calls are predominant. But we still need to be careful right here. You can see something like 0.75 is like the mean for a healthy bullish market, and we're still not there. As far as the net highs and net lows, here is what is really interesting. For the last couple of days, you can see we've gone, I'm not sure, okay, here we go. For the last couple of days, we've been on positive for the S&P 500, which is the white line. The purplish line is still below it, but we have had a couple of days with positive net highs, net lows. So this is positive development. You can see right here, this is positive development for the markets. Also, one thing that I want to remind you of, and we are getting extremely overbought here. Here are the stocks that are above their 50-day moving average on the SPX. So we have 89% of stocks above their 50-day moving average, and if we look back through the entire year, this is the second highest reading. So be careful, this is usually a turning point. You can see right here, this was late August, beginning of September. We were at the highest with 91, I think 92. Yeah, 92 was the highest rating. Right now we are 90, we are 89. So this is the second largest peak right here. So be careful, guys. I think we're really getting to this overbought zone. And as far as the 200-day moving average is concerned, exactly the same thing. So you can see this reading right here now is, again, apart from, of course, the beginning of the year, this is the second highest reading with 61% of stocks in the SPX, SPY trading above their 200-day moving average. So quite an overbought situation, and price is still not corresponding to this action. So now let's take a look at my notes. And for the notes, I don't have much. I just want to show you a couple of things. The first one is the Fed Watch 2. It sits now at 75.8 probability for a 50-point rate hike and 24.2 for 75-point rate hike. Last week when I looked at that, it was 80. So now we are at 75 for 50 points. So I think that there is some sentiment starting to get there that we might actually get a 75-point rate hike. Now it's, of course, it's still quite higher than the 75-point right here, but dropping from 80 to 75, we'll see how it is next week. As I mentioned last week, guys, really what's important to look at right now is the stocks. They are the most important part, and they will tell you how the market is behaving. The great market is not what the Feds want right now. As I said again, last week, data is not strong enough to suggest that the Fed will change the policy. Day to day or month to month changes in the industrial outputs and the inflation is not enough for the Feds to change their opinion. We definitely need something of a fundamental change, fundamental shift. One of the things that I've been reading about is the dropping housing prices in the United States, which will help definitely tame inflation a little bit. But the Fed did say very firmly a couple of times they do have this 2% inflation as their target. So unless we get there soon, I don't think that these rate hikes are going to stop. They might slow down a little bit, which is all the market needs. But I think that the market right now is discounting this, and it's it's behaving as if the Fed has already slowed down the rate hike. So we just really need to be careful here and follow the stocks. And from following the stocks, looking at the stocks this week, I know it was a low volatility week, depending on on the holidays and stuff. But all the breakouts that have happened on low volume, and you can take a look at the stocks like FSLR, like First Solar, which is a great solar panel production company. They broke out all-time highs, very low volume. You can see other stocks like Lilly's trying to break out low volume, and Phase been struggling right there. Orly Automotive, PI, basically all the breakouts that are happening on very low volume, so there's no follow through, and this coincides with the situation we are right now in the market. Chart wise, you saw there's a lot of convergence right above us, a lot of resistance, so be careful there. As far as the sentiment goes, we did record a few upticks on the CNN fear and greetings. We went from 62 to 64. And Bitcoin rose 5 points to 26, but still in fearful mode. Last but not least, taking a look at seasonality. I showed you this graph last week, and although November is the second strongest month for Nasdaq after July, you can see that December is one of the weakest periods of the year. You can see with only 58% probability of higher. You can also see here as that they research the cycle work for Nasdaq. Coming into December, we do have a little push down, so December's bullish is bearish. It's bearish according to our cycle work. And for the S&P 500, December is, I would say, an average month, after November being the strongest alongside April. Now we have 74, and we have a couple of months that are higher here in May and July. So 74 is an average month, but don't expect incredible results. So pretty much everything right now tells you, put a stop and observe. Do not be very aggressive. And in summary, I want to say, yes, we are on buy caution. The setups are neutral and markets are neutral. The put volume and the volatility is decreasing, which of course it's bullish. We still have recession and Fed hikes and talks. I mean, that's not going to go away for some time. And put here, try some, but be careful. As I said, we are in a zone that the market can basically turn around every minute right now. So this is what I have for you. I try to make it as fast as I can. I know you don't have a lot of time to watch these things, but if you take one thing from this whole video, is just slow down a little bit and observe what the market is doing next week, because I think that there is a reason to believe that this market could turn around and do some selling right here to at least try to balance the powers before Christmas. So I hope you like it. I hope it's beneficial for your trading. If you do like it, please leave a like, subscribe to our channel. This really helps with YouTube algorithms and so forth. And of course, you can come and join our Discord, where you can hang out with a lot of amazing traders and get ideas for your trading on a day-to-day basis. So I'll see you here next week with the next video, and hopefully I'll see you in Discord as well. Until then, stay safe, happy trading, and see you then. Bye bye.